Hello everyone. If you are filing ITR-2 for assessment year 2026-27, this video can save you from rejection of your return, loss of deductions, and future income tax notices. CBDT has released the validation rules for ITR-2, and many taxpayers are unaware that even a small mismatch can lead to errors while uploading the return or denial of claims later. In this video, I will discuss the 15 most important points every taxpayer should verify before filing ITR-2. Let's begin. Point number 1. Name, PAN, date of birth must match. The first and foremost basic validation is name should exactly match PAN records. Date of birth should match PAN and Aadhaar records. If you are claiming senior citizen or super senior citizen benefits and your date of birth does not match the database, the benefit may be denied. Action point. Before filing, verify your profile details in the income tax portal. Next, coming to point number 2. Old tax regime option. Many taxpayers still don't realize this. CBDT validation specifically provides that if you miss the due date under section 139 subsection 1, you may lose the option of the choosing the old tax regime where such option is required to be exercised within time. Therefore, compare both regimes before filing. Don't wait until the last week. A delayed return can impact your tax regime choice. Coming to point number 3, directorship disclosure. If you were a director in any company during financial year 25-26, disclosure is mandatory. Even if the company is inactive, many taxpayers forget this disclosure and receive notices later. Keep ready director identification number, company name, PAN of the company. Coming to point number 4, unlisted shares disclosure, and this is one of the most scrutinized areas. If you held unlisted equity shares at any time during the year, details must be disclosed. Example, startup shares, private limited company shares, family company shares. Now, failure to disclose can trigger compliance issues. Next, coming to point number 5, salary exemptions. Under new tax regime, this is a major change. Under the new tax regime, several exemptions are not permitted. Common mistakes, what are they? HRA exemption, leave travel allowance, certain allowances under section 10 subsection 14. Taxpayers often claim them out of habit. Always verify whether you chose tax regime that allows the exemption. Coming to point number 6, house property losses. For taxpayers having housing loans under the old regime, interest deduction on self-occupied house generally available up to the prescribed limit. However, under the new regime, interest deduction for self-occupied house property is generally not available. Many taxpayers continue it and face the validation errors. Now coming to point number 7. Only 2 self-occupied houses. Now CBDT validation checks this specifically. If more than 2 properties are claimed as self-occupied, the return may become defective. Review all properties carefully before filing. Coming to point number 8, capital gains reporting. This is one of the biggest areas of scrutiny. For shares and mutual funds, sale value, cost, fair market value on 31st January 2018 wherever applicable, purchase date, sale date must be correctly reported. CBDT validations specifically check purchase dates, sale dates, long-term versus short-term classification, Schedule 112A reporting. Incorrect classification can completely change your tax liability. Coming to point number 9, crypto or virtual digital assets. If you have traded cryptocurrency, Bitcoin, Ethereum, or other virtual digital assets, the income reported in Schedule VDA must match Schedule capital gains. Wherever applicable, CBDT validations are now specifically checking these disclosures. Do not ignore crypto transactions. Coming to point number 10, dividend income reporting. Many taxpayers forget dividend income. Income tax department receives data directly from companies, depositories, annual information statement, Form 26AS. Dividend income and quarterly breakup should be correctly reported. Mismatch can result in notices. Coming to point number 11, Section 80G donations. Very important. CBDT validation provides deduction under Section 80G is not allowed for cash donations exceeding Rs 2000. Therefore, use banking channels, preserve donation receipts, verify PAN of donee institution. Coming to point number 12, health insurance. Deduction under Section 80D. Taxpayers frequently overclaim. Maximum limit should be checked carefully depending on self and family, parents, senior citizen status. Preventive health checkup limits should also be verified. Point number 12. After that, we'll go into point number 13, HRA versus 80GG. CBDT has included a validation check where taxpayers claiming HRA exemption should carefully while claiming deduction under Section 80GG. Double benefits are restricted. Review both claims before filing. Coming to point number 14, house property co-ownership. For jointly owned properties, ownership percentages must total 100%. Co-owner PAN should be correctly mentioned. Income and interest should be claimed in proportion to ownership. This is now a validation checkpoint. Right. Coming to point number 15, check AIS, check Form 26AS and TIS before filing. This may be the most important tip before filing. Download AIS, download Form 26AS, review TIS mismatch, salary, interest, dividend, capital gains, TDS. Most notices arises because taxpayers ignore these reports. Before filing ITR-2 for assessment year 26-27, remember, verify PAN details, check tax regime carefully, report directors and unlisted shares, check capital gains thoroughly, review house property claims, verify deductions under Section 80G and 80D. Mismatch AIS, TIS and Form 26 AIS. A few minutes of verification today can save months of litigations and notices later. If you find this video helpful, please like, share and subscribe. Thank you for watching.